Now for more discussion on these numbers, Peter Marisi, University of Maryland economist, Nancy Tengler of Laffer Tengler. Peter, take a whack at this number. There's odds and ends and phony and fluky and whatever. What's your take on it?
There's got to be something wrong with the number. As you said in the beginning of your introduction, it's not consistent with all the other numbers we have in the economy. But pick up the hood. How can we have the great retail sales we have been enjoying, the restaurants reopening and demanding all manner of supplies and so forth, and have the transportation and warehouse sector shrink by 80,000? I mean, how are they getting the goods? We know that manufacturers are going full tilt. I can understand circumstances where there are very little job gains because they can't find workers. But you don't go laying off truck drivers and then run stories in the Wall Street Journal, you know, where they interview the truck companies and say we can't get enough workers. It doesn't add up. You're right. Seasonal adjustment factors are based on a stable environment without structural circumstances changing a great deal. Those things have changed. I suspect 10 years from now, when you look at this period, this number is going to be a lot larger because all the seasonal adjustment factors will have been adjusted.
Yeah, you're right. And that's not uncommon in this game. And that's why,
right.
You know, when I had it, I was working on air early this morning when the report came out, and I just threw my hands up and said, this is a fluke. This is a fluke. Now, Nancy Tengler, though, there's one area that does trouble me, and I mentioned it in the opening riff, and that is long-term unemployment duration, 27 weeks or more, has gone nowhere. It has not dropped the way the overall unemployment rate has dropped. In fact, we have a table on it. We showed it once before. It actually has gone up a little bit, and it's still around 4.2 million. And Nancy, I think, I may be wrong, but I think this ties to the issue of overly generous unemployment benefits without work requirements. What you think?
I totally agree with you, Larry, in your opening monologue as well. When you're paying people $23 an hour to sit at home, it's very difficult for employers to attract low-skilled workers. And so that's why some of this skills argument is not really setting well. The survey data shows us that there's 1 million people that are just waiting for those benefits to run out. And that's why you've got McDonald's offering $500 signing bonuses, Chipotle's offering to pay free tuition if you work there for 4 months. The incentives are misaligned, and I think that government is distorting the labor market, and fiscal and executive overreach are a real risk to the recovery.
But Nancy, you're our stock market maven, so I noticed stocks love this report. Stocks looked at it as a lousy report. You know, it's so funny. Even 266,000 jobs. You know, a few 4, 5, 6 months ago, we would have been thrilled with anything like that. So it's not nothing. And we have created 1.8 million jobs in the first 4 months of the year. But, Nancy Tengler, I know stocks love it because it means Fed free money forever.
Yeah, I think that's right. I was on a call with Dr. Yardeni this morning, and he was comparing us to Japan, that modern monetary theory could continue for decades because we are becoming Japan. And that's what stocks are keyed off of. But let's not also forget, Larry, that earnings were pretty spectacular, and we've gotten a muted response from earnings. And so I think what investors are doing is they're rotating. They rotated into tech today. That's been the key theme of this market, rotation and breadth. And that's not all bad. I mean, there's a lot of money on the sidelines. So while I don't agree that we should be focused only on Fed policy, that is at the margin what's driving stocks supported by strong earnings.
Well, Peter, okay, let's pursue this. Profits, AKA earnings, have been fabulous. And I think at the end of the day, profits are the mother's milk of stocks. Now, here's my problem with that story, Peter. Profits are so strong that the Biden administration wants to tax them away. I don't get that. What is wrong with profits? Everybody's profiting from this. Profits make the world go round. Profits let more hires. Profits mean more wages. Profits mean better equipment and technology and living standards. And they want to tax them to death, Peter. Why?
Well, absolutely. They seem to think that if you raise taxes, you won't lower investment. And that's just silly. But then again, that's the Biden book of economics. You know, they want a carbon tax so people will use less carbon. But if you tax profits, you won't use less capital. We are going to get very good profit data, by the way, in the second quarter. On a year-over-year basis, we'll likely be up 50%. That will take the PE ratio down to its historic average. So, you know, we're going to have a great summer rally. And I keep telling people we're going to have a great summer rally if somehow or other Mitch McConnell can keep his thumb in the dam and keep it all from happening, keep these guys from getting everything they want. You know, I pray every night that Mr. Manchin will have an epiphany, a poll on the road to Damascus, and decide to become a Republican.
Don't hold your breath.
I know, but I pray.
By the way, there's one person I haven't called on in this distinguished panel, and that's Nancy Pelosi. I think we have a soundbite from Nancy Pelosi, or you just want me to read it? The disappointing April jobs report highlights the urgent need to pass President Biden's American jobs and families. We need to take bold action to build back better from this crisis by investing in our nation, our workers, and our families. Now, Nancy Tengler, I knew this was going to be the line. And I don't know. Look, he's got $4 trillion. Why stop at 4? Why not go to 6? If you believe in it, then do more of it. I mean, why stop at 28% corporate rate? Why not go back to 35 or 40? If you believe in it, why not do more of it? Your take?
There was a great book, no, totally agree. There was a great book written by Jim Payne in 1992 where he identified the bureaucratic rule of 2. By the time the government collects $1 and spends $1, in 1992 it cost them $1.05. So this notion that somehow raising taxes is going to be beneficial to anyone, I'm sure now it's $1.50. So I take issue with that. And then this guilty tax proposal is going to penalize the very companies that we need the most: technology companies, pharmaceutical companies, semi-cap equipment. So the policies don't line up. They don't make sense, as you said earlier. And I think we should get government, lifetime government employees out of the free markets and let the free markets take over.
By the way, Art Laffer did a study a while back. To spend $1, it actually cost you $1.35. No one ever talks about that for the efficiencies. Okay, we're going to go on the way out real fast. Nancy Tengler, can you make us some money this evening with all this wisdom? What's your best play right now?
Yep. If I had to only buy 3 stocks, I would buy Federal Express, I'd buy Amazon for reasons that are valuation driven, and I would buy Lam Research.
Wow. Peter Marisi, can you make us some money?
Well, I think the best thing to do is put your money into the S&P 500 index fund, because we're going to have a broad-based rally. And no matter how you slice it, you're going to make a lot of money.
That's how I've always played it, Peter. You're a man after my heart. I buy it, and I hold it, and I just pray every night. Deep prayer and meditation. Peter Marisi, Nancy Tengler, you're both fabulous.